Whoa.
Yes, we are live.
All right, so looks like we are live. We are live on Twitter as well as on YouTube. I hope you guys can see my screen. The market has opened. So, okay, so some context, right? Today is the first trading day of the new fiscal year. And, oops. Yeah, today is the first trading day of the new fiscal year. And the market has opened with a gap up. Our mid-cap position has been open. So we opened it last Tuesday, if we remember correctly, and all we had done was we had sold a 30 delta triangle and we'd bought some wings. The idea behind buying the wings was not for margin benefit, but it was to cap our maximum loss. So the maximum loss that we had on the downside was a little over 12,000 rupees, and the maximum loss that we had on the upside was, as you can see, 11,000 rupees. So, just 1 second. All right. So that's the core of the strategy. The core of the strategy is that I'm going to do something very simple. I'm going to sell a triangle. I chose to sell a 30 delta triangle. You can decide to sell some other delta, right? Your win percentage and your probability of profit essentially will change. Your risk parameters will change depending on what kind of a triangle you sell. The further out triangle you sell, if you sell a 20 delta triangle, for example, your win percentage will increase. But it comes at a trade-off. I decided to sell the 30 delta triangle, and what we've seen right now is that Midcap has actually blown through my short strike. My short strike was 10575 on the upside. It was hovering around this number on Thursday before market close, and now because the market opened gap up, it has blown through my strike. So let's actually take a look at what Midcap is doing. So Midcap had made us move down, and now it's gone all the way back up again. This profit probably is not correct. We're probably at a small loss right now. Let me just refresh this guy, Midcap VRP. Let's click refresh again. Yeah, so we're probably going to be at a small loss here. So this is okay, very near break even. So what I'll do is I'll just hold on to this for the next 15-20 minutes while we are live streaming. I have an option of closing it out. In fact, I probably should close it out. The reason being that we've accumulated. This is what the position looks like right now. It's just a pure delta position, and whatever the expiry day volatility is, I'm taking that up right now. I'm taking that on right now, which is the expiry day volatility. Just give me 1 second. I'm just trying to figure once every minute. Anyway, so whatever the fluctuation in my PNL is right now, guys, it's coming purely from delta. Wherever Midcap moves, if every tick up that Midcap moves, I'm going to, for every 1 rupee move, I'm going to lose like 70 paisa on the Midcap side, because I'm so close to being 1 delta, right? I'm near my short strike. I would want, if my PNL has to improve, I would want Midcap to go back down. But who knows? There's if I have no opinion on the market, I will probably just say that, hey, there is a 50% chance that Midcap is going to go further up from here, and there's a 50% chance that it's going to go down from here. Let's look at some of our other positions. We had a Bank Nifty position as well. I don't know what Bank Nifty has done. Bank Nifty is also up close to 1% today. And yeah, we haven't blown through our short strike here. We are still within the range. Bank Nifty is still within the range. It would be same story here, right? We've accumulated short deltas, and we would essentially want to we would want the market to settle down a little bit, go back down a little bit, just so that it stays within our range. The idea behind this, strategy is fairly simple. That when can we lose money in this strategy? We can lose money in this strategy when the stock makes aggressive moves up or down on a consistent basis, right? Up one day, down the other day, up one day, down the other day. It won't matter as much to us as much as the path dependency of just going up, 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 or down, 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 down. So the last few days, the market has gone up more than it has gone down. And that's what we are kind of seeing in our mid-cap position. Let's take a look at that again. Again, the fluctuation from the PNL is coming purely from delta, and based on what I've done in the past in this strategy, right? The previous 4 trades that we recorded, that we had pre-recorded when I was trading them live, the idea was that I don't want any expiry day volatility, and that is correct today as well. But what I'm going to do is I'll take on this volatility for the next 15 minutes. I don't have any opinion on Midcap, but I'm hoping that Midcap makes a little retracement from the gap up so that I can make a little bit more money. This is again something that probably one shouldn't do, but since I'm live for the next 15 minutes, might as well take a look at what Midcap is up to. Yes, keep going down, Midcap. Keep going down. Let's look at some of our other positions. Okay, let's do this. Let's actually put on a Nifty position, right? So I talked about it on Thursday night that we'll put on a Nifty monthly position. So let's actually do that. Let's go to create new strategy. And let's go to Nifty. Nifty is also up, as you can see. So what we'll do is we'll do something unconventional, and we'll put on a Nifty 59 day to expiry trade. Okay, we'll do the same thing where we'll sell a 30 delta strangle. Let's do that. There's more room on the upside than on the downside. So what is the future doing? The May future. Anyway, so let's actually put this position on. So I've selected a 30 delta strangle which I'm going to sell, and I'm going to buy I don't know, let's try buying the close to the 10 delta strangle as a hedge. The sole purpose of the hedge here is to limit our maximum loss. We are not doing it for margin benefit or any of that. We are only doing it because that's the maximum acceptable loss that we are willing to take, right? In the meantime, let's take a look at what Midcap is doing, just kind of hovering around here. So let's put this position on, let's say on a live trade with IFL. Let's call it Nifty monthly VRP. Let's confirm this, and let's wait for the bids and the offers to pop up. This is going to be somewhat illiquid, so we just have to wait for the bids and the offers to come up. You can also do one thing where I can just type Nifty options chain, and I can take a look at, so this shows you with 15 minutes delayed. The NSE side shows you what so hi Nikunj. Nikunj says hi. Hi Nikunj, how are you doing? So let's actually just change the expiry here to 30th May. Have the prices come up? Okay, so I'm now able to see the bids and the offers. Cool. So let's try to go mid market like I usually do. That is always my preference. There's not much of a bid offer spread here, so I can probably just cross the market here, maybe not. Let's say I want to just do 466, let's say 80. So this isn't really going to move much at this stage, this triangle, because it's so far out. So I can afford to play at least some games with regards to placing orders. I don't want to give this 1 rupee 20 paisa up, right? So let's just place the orders and see what it looks like. Let's take a look at how Midcap is doing. So Midcap has made a little bit of a retracement, which is good. Hanji. Let's go back here. If you guys have questions around this strategy, right, the core of this strategy, when can we make money, when can we lose money in this strategy? So the thing about this is, what you have to understand is when you decide to trade, when you decide that, hey, I want to, when you pick up a strategy, right, and you're like, okay, this is the strategy that I'm actually going to trade in the live market. One thing you need to be aware of is, like, of course, you won't know the full answer here, but you should know, hey, when am I going to make money in this trade and when am I going to lose money in this trade, right? For us, the most basic, like if you're just looking at prices, right? The most basic explanation is, hey, I'm going to make money if Midcap stays between this particular break-even range. Hello? I'm going to make money, and we are awfully close to that range right now, right? That's one way of saying it. The other way of saying it is from a volatility perspective, that but that's only for this trade, right? So when I put this trade on, this specific trade at these specific prices, I got my specific break-even prices, that hey, if Midcap stays between this price and this price, I'm going to make money. But can we generalize that a little bit, right? So that every subsequent trade that we put in with this strategy in mind, what is that one general statement that we can make that can guide us in our decision making and sort of guide us in our P&L attribution as well on average, right? Okay, what is my P&L going to be driven by in the long run? This is one specific trade, right? So one specific trade, the evolution of one specific trade depends on, hello? Going back to what I was saying earlier, that can we generalize this trade a little bit and say, hey, a single trade's P&L is often driven by luck. Luck and whatever is happening in the market at that time, but the long-term P&L is driven more by essentially whether you have edge in the strategy or not, right? So what does edge mean? Edge just means that if I keep putting on, if I keep making the same decisions, given the same input from the market, if I keep making the same decisions in a consistent manner, in the long run, I'll make money. Every individual trade, the P&L of every individual trade will be driven more by volatility, but in the long run, this volatility will smooth out, and whatever my actual sort of edge or advantages that I have over other traders when I'm placing on this trade in the market, that will sort of come through, right? So back to when this trade will make money. A more general statement around when this trade will make money is dependent on how Midcap Nifty moves over the life of the trade, right? And it's not driven by these two specific break-even points or any two specific break-even points, but it's more driven by what is the realized volatility of Midcap Nifty, the index. Now, there are different ways of calculating the realized volatility. The simplest way of calculating it, that's how I look at it, is just the standard deviation of the price changes, right, over the life of the option. So that's what we have over here, which talks about, so this tool that we have, the Monte Carlo analysis tool, this kind of tells us that whatever the realized volatility is going to be over the life of the option, you can plug that number here and then you can run some simulations to see what your PNL is going to be on average, right? So based on where my position is right now, if Midcap now for the rest of the day moves at a realized vol of 15, I'm going to make an average of 1,000 rupees over 10,000 simulations. I'm also going to be unlucky a few times. So I'll also realize my maximum loss at some point, which is close to 10,000 rupees, right? And I'll also make my maximum profit at some point, which is 5,000 rupees, right? And these are just individual paths that Midcap has taken, assuming that it's moving at this particular volatility, right? So it looks like Midcap is going back up. Let's take a look at that, making a move back up. So essentially, we are just riding the volatility. Should I put on another trade right now? I don't know how we're doing on the live streaming front. We have some VRP. क्या है? VRP है volatility risk premium. We are going to go into it in more detail over the next few days. But let's just figure out these tech teething issues. So let's place this order and see if we can try to close out our position. There's also, don't think it's going to be worth 59.60, probably worth a little bit more than that. So we'll just close out our position right now, whatever our delta risk is. I've streamed for half an hour. This was an experimental stream, obviously. And we'll see how we do in the next couple of days from a product perspective. The idea being that I'll come in again today at 3 o'clock to look at some of the other trades that we put on. But इसको अभी close करते हैं, Midcap Nifty को. Let's place orders. Chalo, at least we are getting feedback now. 59.80 I probably would have bought it back. So there's a slight delay. You can see here that the order is working. We are waiting to get the confirmation back from the broker with regards to the order, and yes, you can see that the order has now been completed. We should get an alert here when we weren't able to connect to the web socket. That's something we should have shown. And now, so we've essentially closed out this position. I don't want to be in front of the market for the rest of the day, which is why I've closed out this position. There is going to be some expiry day volatility. I had blocked this time in the morning that, hey, I'll only be in front of the market from, at least in the morning, from 9:30 to 10 a.m. And I was happy to take the volatility in Midcap Nifty moving up and down during this time. But for the rest of the day, I have other things to do. So I'm going to get on with those things. Specifically, I'm going to ask these guys to work on, let's get these done for tomorrow. So, okay guys, so the position is mostly closed. I'm short this downside put, but I'll leave it open. I'll take the risk of leaving it open. I don't want to pay that extra bit of brokerage. At some point, there is a chance that this could really come back to bite me, but abhi ke liye I'll just leave it open for now. And yeah, so we put on this trade and we've made a little bit of money, not as much as we would have liked to, obviously. And I'm not really sure what Midcap is going to do for the rest of the day. I mean, if it makes a move back down, we'll make money. But the core principle of this trade, the way I am trading it, is that I don't want to trade on 0 DTE, because whatever I get on 0 DTE is pure gamma and delta, and I don't want that. What I want is volatility, right? And the core idea behind the strategy is that your edge is actually driven by what the volatility of Midcap Nifty is going to be, the underlying, over the life of the option, right? And it also depends on what the implied volatility of the options was when I sold them. So this relationship between implied volatility and realized volatility is what is going to drive my PNL in the long run. In the short run, it will be driven by whatever random things are happening in the market, news, random order flow here and there. In the short run, it very well will be driven by that, and that gets magnified on a day like expiry, and specifically for our position when we've blown through our short strike. Once you blow through your short strike and your days to expiry are so low, so our short strike was 575, Midcap has blown through it, it's at 636. So, and it's the last day to expiry. So if Midcap keeps going up, we're just naked deltas, right? If it goes back down and it sticks around at 575, then we have a lot of gamma, and our P&L can go either way, right? And both these things are drivers of volatility in our P&L. What we don't want is, we don't want volatility in our P&L, because of which I decide personally I'm not going to trade on expiry, right? So so that's where we are right now. We are right now 5 out of 5 in our trade. We've made money in all 5 of these trades, but that is obviously going to change, right? Because this is a risk premium trade. We are taking risk and we are being expected to be compensated for that risk. So at some point that risk will materialize and we will lose money, right? Today, it seems like today is not going to be that day. So might as well just practice what I preach and just close this position out completely, right? Why hold on to this dangling, why hold on to this dangling put? Let's go. Okay, I'll buy this really expensive option and get out of the position. Some point I should probably do a calculus on, I think the brokerage that I pay is 2 rupees. So I'll keep this guy on, maybe get some of this money back. So it's like 75 is my lot size. So let me just close this out as well. Right, get some money back instead of, because these are really, statistically speaking, these are really bad options to be long. Specifically, the far upside calls that are expiring today and the far downside puts that are also expiring today. Midcap is pretty far away. So what I'll do is I'll just sit here at the offer and I'll pay up for this, because I just don't want to have that short strike hanging around. So let's just place these orders, and you can see that, okay, I got this at 140 and I should probably get this as well. Getting a bit of a delay. Yeah, so I've now fully closed out my position. Made 1400 rupees or so. Not including brokerage and taxes and stuff. So we are 5 out of 5 on our trades so far, and we have some trades running. We're going to go more into the details around, what this strategy is based on and what are the different ways in which you can actually harness this risk premium, this volatility risk premium. One way that I've chosen is, hey, I'm just going to sell a 30 delta strangle and I'll buy some wings and I'll essentially cap my max loss. There are other ways of doing this as well. You could sell straddles, you could just sell downside puts along with the future. There's a whole array of different ways, different trades you can actually put to capture this effect. And we've also put on this monthly position, right? So let's see what the position looks like. Yeah, so we'll see how this trade evolves over the next few days. I'm not going to, so we have 60 days to expiry for this trade, right? So we have a lot of time. Nifty has a lot of room to wiggle around during this time. Volatility is low right now, which is probably not the best price I got, but that also depends on what the realized volatility is going to be. So a realized volatility of 13 will give us a loss over the life of the option on average. The lower the realized volatility. So here we can see yeah, we don't want Nifty to move that much, right? And there's plenty of time here. There's also the election, if I'm not mistaken. There's going to be rumors in and around about the election as well. So this I would say is a pretty risky trade. Even though my max loss is defined at 30,000 rupees, but because the volatility is so low, the implied vol is so low, which I sold it at, there's only one place for the IV to go, which is going to be up. Like, it would be interesting if the IV goes even lower. But there's only one more often than not, vol will move in one direction, which is up if something happens. But the question is something going to happen? And that's the risk I'm taking, and that's the risk that I hope to be compensated for. Right. So, okay, guys. So this was a first initial trial live stream. I'm going to close it down, and we'll connect again for 15 minutes in the evening to see what actually happens. Yeah. So we'll do a retrospect of